Hey soldiers, quick update. Signature Bank has been shut by regulators after this SVB failure. Looks like they got bit by a crypto bet that went south. Failure of the real estate lender hobbled by crypto bet is third largest in history. We just had the second largest in history the other day, Friday, with SVB. Signature Bank was closed by regulators on Sunday, the second massive bank failure in 3 days. The New York-based bank faced a crisis of confidence after mid-sized lender SVB Financial was seized by regulators on Friday. So a little bit of contagion here, guys. Signature was also reeling from a bet on crypto banking that foundered after the second imploded and banking after the sector imploded and banking regulators cracked down on lenders' exposure to digital assets. So that one has kind of an FTX connection to it, because remember that crypto industry lost a lot of faith, went through a lot of turmoil back in November of 2022 when FTX failed. This is the third largest bank failure in history. This is breaking, guys. Don't have a lot of information about it right now, but we do know that both SVB and Signature Bank depositors are going to get all of their money as the Fed moves to stem the tide here. So I know a lot of people are going to have, a lot of feelings about that. This is basically a bailout. U.S. regulators took control of a second bank Sunday, and we just talked about that being Signature, and raced to roll out emergency measures to stem potential spillovers. Now, on the side of advocacy for this bailout, what the Fed is trying to do is say, look, this thing might get even worse if we don't control it now. Remember, SVB, a lot of businesses bank there, and they might be in danger of not being able to make payroll. Okay, this would lead to more bank runs and, have a serious downstream effect on individuals. Okay, so that's the, devil's advocate piece of this. Look, bailouts, who pays for them? We do, but are we going to pay a larger cost if we see a greater fallout in the overall economy? Regulators announced Signature Bank, one of the main banks for cryptocurrency companies, as we said earlier, was closed on Sunday. So that's what we've got going on here, guys. Some real deal fallout from interest rate hikes. We've gone over that, and basically how these banks, in part of the reason why they're having trouble is because they bought instruments at one rate of return, and then essentially Fed rates hiked, putting similar instruments at a greater rate of return. And so the banks had a run on them because people were seeking better returns because they were out there due to the interest rate hikes. So this is fast moving, guys. I'm not going to really be able to get into the weeds of this until some of this fleshes out, but you need to know that as of Sunday, we got Signature Bank. We don't know who's next. I know right here in Maryland, they're talking about PNC Bank could be, that's a regional bank here, could be at risk. M&T. If you're an NFL fan, the Baltimore Ravens play at the M&T Stadium. That's a bank that's regional here in this area. And there's a long list of other regional banks that could be seeing some serious fallout from what's going on. Now, the Fed issued a statement in part saying to support American businesses and households, the Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all of their depositors. This action will bolster the capacity of the banking system to safeguard deposits and ensure the ongoing provision of money and credit to the economy. So the Fed stepping in big time, guys. They are, some would argue this is a panic that's going on. Now, the Fed went further and said that they're prepared to address any liquidity pressures that may arise, which in turn has just unveiled the first bailout acronym of the new crisis. They're calling it the Bank Term Funding Program, BTFP. Of course, the government loves their acronyms, right? The financing will be made available through the creation of the new Bank Term Funding Program, offering loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions pledging U.S. Treasuries, agency debt, and mortgage-backed securities and other qualified assets as collateral. So guys, this is pervasive. We're not just talking about the regional banks here. We're talking about credit unions and different saving associations as well. And we know that the credit unions are usually kind of insulated from a lot of this stuff, but the Fed feels as though that may not be the case here. So they are opening up that window of the Bank Term Funding Program to allow them to participate if need be. And remember, Signature was taken over, just like we saw with SVB. First, the state stepped in, and then in came the FDIC. Similar situation in New York with Signature. The BTFP will be an additional source of liquidity against high-quality securities, eliminating an institution's need to quickly sell those securities in times of stress. So this is sort of a panic. I think you can accurately characterize it as such. The Fed explains that the Department of the Treasury will make available up to $25 billion from the Exchange Stabilization Fund as a backstop for the BTFP. And remember, BTFP stands for Bank Term Funding Program. So we've got a lot of money out there. They are anticipating that the final number of needed backstop liquidity may be north of $2 trillion. Absolutely incredible. All right, we'll continue to monitor this situation. It's fast moving. There's a lot going on, and we've released a lot of information on the channel about it thus far. Keep following it, guys, and I'll tag you right here on some of the other reporting we've done on this, including the situation with Roku, as well as the initial outbreak of this. All right, guys, I'll talk to you soon.